In my previous idea, I discussed the possibility that this may be a bottom. So for me, I had to sort of have a look at a couple of things, especially the first move, which I believe now was a 5 wave move. So in this particular case, we're going to look at it as wave A. If it's a wave A, I need a wave B. So the wave B also contains the 5 corrective patterns, right? So this particular view makes a lot of sense according to the waves. So if this was going to be the start of a new trend, then it's easily interchangeable to make wave A in brackets the wave 1 and the wave B a wave 2. Okay, so I just want to talk about this for a minute because it's important that wave 3 doesn't usually start off so choppy. It can sort of, I suppose, at the very beginning start off choppy, but then it starts to gain momentum. But typically, you'd see this next move up start to be really strong. So I'm going to go down to the smaller degree to sort of talk about that move. But if this is a zigzag pattern, wave A, in other words, this is just wave 1 down for the wave E, um, then obviously we need to create the zigzag, right? Wave A and then a B wave down. So this could take its time, extend lower, but do it in a very grindy manner. Uh, and these are the two possibilities. Now, obviously, I've already mentioned if we break the highs up here at about 20 cents, then this correction was completed down here at 10 cents. Okay, so it's very important also to understand that if we break the low, that kind of also, in my opinion, means we're going lower, right? Break the low of 10 cents. Because if this was a wave 1, well, wave 2 cannot go below the start of wave 1, right? Now, even though this is Arias wave, as I mentioned many times, it's not Elliott wave, there are some rules that still apply, right? The only difference with Arias wave is we pay a lot of attention to the corrective portion of a move, and those moves are similar in wave B of a zigzag and wave 2. So there's no way of knowing 100% unless you get confirmation of these levels as to where we are. So if we're to measure the same length as wave A, right, then wave C should extend back to the roughly 0.618 area before going back down, right? And if it was a wave 3, it would continue higher. It'd break that top, right? And it would also look a lot sharper on the way up than the first move up, right? But if it starts to chop out as well, for me, this is simply a zigzag wave A. So I'm giving you both scenarios here, just so you don't think that have a bias, because it's hard to have a bias when you haven't seen the wave A completed yet and a wave B forming. So at this point in time, I'm open to either. But there are other things that I'm looking for as well, which I'll talk about later if I get to it. Otherwise, I will produce a separate video for XRP because I have a good idea of what that's doing, as well as H bar, very similar patterns between the both. So yeah, those two are actually pretty interesting, and I want to get to those over the next day or so. Um, it's New Year's Eve here in Melbourne, Australia, so I might get to it tomorrow, but we'll see. Now, if we go down to the 1 hour chart, right, this is a choppy mess, but this is how I count it. Wave A, right, we have a wave. Now, this is obviously I'll just get this brush out. Uh, Wave A is the first move down. We have a wave B, C, D, E. So that's how I count this correction. It's like a cup and handle pattern, and that's why I believe that yes, it can go higher, but What it goes higher as, that's a different story. Wave 3, in my opinion, starts off faster than that, uh, more speed behind the move. But at the same time, if you go back to obviously the first move, this wave E tends to be sharper as well. So being so choppy and grindy, look, I would have expected a move to be sharper, reverse up for wave 3 if it was the end, right? But it's it's the evidence is mounting against the wave 3 having started at this point, and I'll sort of make a comparison with XRP and H bar on why I believe that's the case. So for now, yeah, we're getting there. But let's have a look at the smaller degree to see if I can gauge where we're at the moment. So let's just say this is wave C. How do I count this? Well, we had a wave 1, A, B, C, D, E. So wave 1, A, B, C, D, E. And now, as you can see, we've come back pretty deep. If that's the case, normally with wave 3 price action, you don't see this type of pullback, right? Now, for this count to not be completely wrong, we can't really go any lower than where we've dropped down to right now. So this area right here at about 13 cents, that's kind of support now, right? If this count is correct. So from 13 cents, we need to go back higher. Don't worry about the green line. That's just measuring wave C, same as wave A in brackets. But from this point here, it would be expected that we don't go any lower, any lower. Otherwise, this count is invalidated at the small degree, right? Now, this is quite a choppy mess. So getting to this count took some time, but it also has its limits, right? We can't go any lower from here. Otherwise, I'll have to report back. But in general, the larger picture stands, which like holds water still, I believe. And obviously, that's such a small degree. Look, let's go to the 5 minute chart. I mean, at small degree, it's hard to sort of um, capture the waves, understand the waves. Um, so if it does break it, okay, that's great. I need to revise the count. But look, the point is that it doesn't it doesn't really matter because at the higher degree, we are looking for that type of move up. Now, I suppose at the small degree, you could also argue the mini head and shoulders pattern, the inverted mini head and shoulders pattern, and how high would that go if you measure the inverted head to roughly the neckline, right? From the end of that, I mean, you'd get something that doesn't go above the high anyway, right? It doesn't necessarily mean that it needs to be measured from that spot, but even if you measure it from the end of wave E uh, of the wave B, it still takes you roughly to the same area because that's usually where I measure things from, the end of wave E, because that's the end of the correction. You can measure it from the neckline above, but I mean, either way, it doesn't really matter. It's just semantics. I suppose knowing what you're measuring to begin with is important. At this point in time, we don't really know 100%, but the evidence is mounting that the choppiness of this move suggests that its upside is currently limited, especially if it continues to sort of chop out the way it has been already. If this was wave 3, it should have basically produced wave 1, 2, and it should have been sharper break done, right? But this continued chop here, it gives me the impression that, yeah, it's just corrective, right? It's corrective. Now, that's the personality of the move, right? It's got a characteristic behind it. A characteristic of a wave 3 is pretty sharp. So in general, the whole thing looks like it's still in a correction for wave E, which I find interesting in itself, regardless, especially if we're looking for a move lower down to roughly the 5 cent area, 5-6 cent area, that could be the case. But look, this video has gone on for too long already explaining this small degree move. I will be presenting a new XRP idea count, which is not very bearish at all. And really, it's just about this area, the small area that it's currently trading in, which is important. And we'll talk about more about that in the next video. So thanks for watching.